Okay, Colin, good afternoon. How are you?
Good. How are you?
We're good. Ben, I'm also hoping that we're in a better position now. Do you think that we are very close to the end of the banking crisis, and can we now confidently put our money back into banks?
Well, Barclays just came out today and believes that there's going to be a second wave of money being moved, and I agree with it because for a lot of investors and people that have bank accounts, it's hard to separate from a bank. If you have a business banking account, if you're looking to, you have significant loans with them, multiple accounts. It's. I know a number of business owners that even with banks that they don't feel comfortable with, it's very hard for them to move. So it's going to take a few weeks. So I think you're going to have a second wave, people moving into different banks. And I still think people are going to move entirely out of a lot of their money out of the banks because they don't know what's going to happen. And even though the FDIC and the government is guaranteeing depositors at these few banks, we still haven't seen if a major bank, I mean, we're talking about a top 5, top 6 bank, something were to happen there, how would the government react? Because they don't have enough in reserves. They have 120, 150 billion set aside. This wouldn't cover a lot of the major institutions. So there still is risk there. So I think people are looking to divest and move into different directions with some of their funds.
The government can print money again.
The government can print money, yeah. And it's what I've been talking about. I've been predicting that we are going to go at the end of this year, I believe, through a second wave of quantitative easing. I think it's going to be very similar to what we saw in 2009, and that they're going to expand the money supply. I think where they're going to churn, I think interest rates go back, not back to where they were a few years ago, but they start to pull them back a bit, rates. And I think we see the spending spree happen again, and I think money's going to start flowing by the end of this year.
So you think they're going to do that even with the Federal Reserve saying that we're not ready yet to stop tightening?
Well, I think they're going to have to. I don't think they have a choice. I think we're going to see, in terms of jobs, what's happening, the recession. I think they're going to need to free up money. It's just getting too expensive. And we're not in a normal economy where rates were close enough that it made sense. I mean, we're 300 or 400 basis points from where they were a few years ago. So I think they're gonna pull that gap in and make it a little bit easier for people to buy homes. They can't afford to have this housing crisis continue for multiple years. There's too many jobs at stake, too many businesses, too many companies at stake. So they're going to need to find a way to bridge that gap.
And do you think that all these layoffs that many tech companies, well, now it's not just tech companies that are actually letting go of their employees, but they're letting them go by the thousands. You think this is because they're preparing?
Yeah, and I also think they found an opportunity. A lot of these jobs were probably jobs they didn't need. A lot of jobs are getting replaced by a number of different AI components, and so they saw an opportunity to do some mass layoffs. Obviously, there's situations where companies have to do layoffs in a situation that it doesn't look bad for them, and so I think they found an opportunity to do some layoffs. They found a number of positions. I mean, we're talking some of these companies, 7, 10,000, 12,000 positions. These are massive layoffs, and these companies are stock market has reacted positively to them. So I just think a lot of these jobs are jobs they wanted to get away from anyway, really had nothing to do with the economy.
Okay, so do you think then that if all of these things happen, you think that gold is going to inch closer or at least go past 2,100 within the year?
Oh, absolutely. I think that we're going to see a real bull market run in the metals industry. I think it's been tiptoeing here. Obviously, with the banking crisis, we saw metals start to move up. But that 2,000 number is sort of the sweet spot that everyone's been talking about for gold. And then silver. I think silver breaking $30 an ounce is very likely this year. All the industrial demand is very high. We've seen it on the physical side. It's difficult. It's more difficult than ever to get silver right now. So I think that's going to continue. And just the industry alone, the industrial demand for those two metals is really high, and it's continuing to grow. So I think that's why we'll see both those metals. I think gold 2,300 this year, and I think silver breaks through 30 is my prediction.
But do you think that many of this, at least the government or maybe even central banks of other countries are trying to control the price of gold? Because it seems that it's at this stage, gold should be closer to 3.
Yeah, I mean, listen, I think when you look at an asset that conflicts with fiat money, obviously they want to keep the price now. Gold being really strong doesn't help, the U.S. dollar. it doesn't look good for fiat money because, as we know, gold's been around for 5,000 years. It's the only true currency because it has a limited supply. It's pretty simple, and why it's so valuable. It's limited supply. It only grows by a little bit amount each year, unlike the dollar and other things that can just expand, just depending on what the governments want to do. So, yeah, I think they have an incentive to keep the price of gold down. That's why they never really talk about gold. The Fed, no one ever really talks about the price of gold. But I think ultimately, at the end of the day, like it's an asset that people want. Last year was the biggest central bank buying of gold in 2022 than we've seen in almost 30 years before that. So the central banks know. They know that it's an asset they want to have on their books. They can lend against it. They can trade with it. It gives them a lot of flexibility, and so that's why they're going to continue to buy it. And I think that's going to help push the price up over time. And I don't think they'll be able to deflate the price of precious metals for a long time.
Well, I was supposed to close with that, but I have a breaking news. Is it okay for one more question?
Sure.
Trump just got indicted.
Oh, really? Oh, okay.
Yep.
Wow.
So this is going to be the first, apparently, for a U.S. ex-president. How do you think it's going to affect the economy?
Well, political instability is never good, and I think that obviously he predicted it a few weeks ago that this was going to happen. It'll be interesting. I think the markets tomorrow would react negatively to this, just because I think that, for what everyone talks about with Trump, where they know that there's certain things that he's good for, which is business, and so I think that overall the markets would probably react negatively to what's happening to this, and I guess we'll see what happens. Yeah, but that is interesting news.
Yeah. Well, okay. So we don't know what's going to happen, obviously, but as an investor, is there anything? And it looks like if there's any political instability coming my way, how can I really prepare?
Well, we talk about it. It's what, right now I'd say more than anything is be educated. Be educated in different investment classes. Obviously we know that certain investments have really struggled over the last few years, and I don't know if the environment for equities is going to be strong for a while. So it's really looking at what you have, looking at your full pie of investments, and making sure that you're protected. If you're closer to retirement, have some things that are going to be a little bit safer that you can rely on. But yeah, gold is obviously, people are talking about gold. It's in the mainstream, and we're shipping a lot of it to people's doorsteps. So if anybody's looking for that, we can definitely help them out.
And you have enough silver and gold?
We do.
Okay. All right. Thank you, Colin.
Thank you.